Hey everyone, and welcome to Earnings Cheat Sheet for Friday, May 10th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, I think I spy some market surge swag there. What do you have on tap for us today?
Yeah, I got a little bit of swag here. But I want to take a look at Walmart, Sea Limited, and Applied Materials. Three interesting earnings reports coming up.
All right, well, let's start with Walmart. The retail giant is scheduled to report its Q1 earnings on Thursday, May 16th. And let's take a peek at that cheat sheet. Earnings are expected to rise 4% to 51 cents per share, and revenue is expected to climb 5% to 159.4 billion, and same-store sales are expected to grow 3.6%. And here's why we're watching Walmart. We'll be paying attention to comments on consumer spending and watching e-commerce growth. We'll also be interested to see if Walmart gives any updates on supply chain automation. So, Ed, this is really one of the first waves of big retailers reporting this week. So, what is this going to tell us about the market?
Walmart, obviously, it's a gigantic retailer. If it's not the biggest, it's one of the biggest employers in the U.S. What they have to say about consumers is going to be really important for the entire retail sector. Give some idea about wages, even in this kind of context about inflation and concerns about the Fed, it could have a lot of impact. Uh, you know, this is not going to be growing, as you talk about, single-digit gains. This is not a company that's going to, sprint out anymore, like have these mammoth runs in terms of earnings growth and sales growth, but it's still doing a really, doing a solid job. And so it's more of a stock that can do better in defensive times, but it also still has an ability to have decent runs in terms of stock performance as well.
All right, well, let's take a look at the chart because, as you mentioned, it's had a nice, decent run here over the last since the beginning of the year, and working right now on a flat base with a 61.66 buy point. What do you have to say about the chart here?
One is that while the stock has risen a bit, the relative strength line still hasn't gotten back to just even sort of like the late 2023 highs, let alone longer term highs. I mean, that's a reflection. It actually outperformed, had a good spring and summer, did very well, even when the market was struggling a little bit, but now not so much. But now it is setting up again. It's tightening up, and it's acting well. It's got a new flat base going on. Actually, if it makes a strong move from where it is, maybe on earnings, there might be an early entry in there. It might otherwise already be an early entry if it weren't for the fact that earnings are coming up so soon. So that'll be interesting to see if it can go. Again, this is probably not one that is going to be a major mover, but especially if the market is shaky or the economy is shaky, this is still one that can show some decent performance over stretches of time.
All right, well, let's take a look now at Sea Limited. Now, this is a Singapore-based digital and e-commerce platform. The company reports its Q1 results on Tuesday, May 14th, and earnings are estimated to swing from a 15-cent gain from the previous year to a 3-cent loss this quarter. Revenue is expected to climb 19% to 3.62 billion, and analysts expect 2024 EPS to double. And here's why we're watching Sea Limited. We'll want to see how their Shopee e-commerce platform is stacking up against rising competition with Temu and TikTok Shop. So, Ed, I feel like this is one that's been in the ether a lot, that's being discussed on IBD Live. So, what is the story here with Sea Limited?
Yeah, Sea Limited, I think it sort of may stand for Southeast Asia because it is a pretty big player in Southeast Asian e-commerce and gaming. It goes on, while it's supposed to have a first quarter loss this time, as you say, earnings are supposed to double. I think they're doing some spending in part to compete with Temu, which is owned by Chinese e-commerce giant uh, PDD Holdings, as well as TikTok's e-commerce options, as you say. But strong growth had seen a turnaround, and this was a huge winner heading right after COVID in the post-pandemic rally, but then really sold off. There was a lot of weakness around, but it's coming back, showing a lot of strength in terms of the stock, because I think people are anticipating that, like that growth is coming back. Obviously, I think the thing is that this quarter, are they going to, is that outlook going to be there? What is their commentary in there? Are they actually going to deliver that kind of earnings growth that we saw. So that kind of rapid growth that we saw in years past.
All right, well, let's take a look at the chart. And as you mentioned, quite a turnaround, practically doubled since hitting those lows in January. And also nice to see that relative strength line climbing as well.
Yeah, that RS line is sort of over that, is above the short consolidation. A little tiny one that was probably not quite long enough to be a base. Probably could have used a buying opportunity there. It's sort of a little extended there. You could also see that there's a sort of a larger consolidation going back almost a year, and obviously there's a lot of potential overhead resistance when you see that massive sell-off that came from before. Not only does PDD have, not only does Limited have earnings, but we also have Alibaba, which does compete somewhat in Southeast Asia as well as China, and JD.com. So there's a lot of Asian e-commerce giants that are reporting this coming week. So that'll be interesting. This has, as you see, there's some really strong growth depending on the metrics that you look at. However you look at the metrics, there's supposed to be strong growth this year and then next year, and obviously that's what's driving the stock rebound here.
All right, well, let's jump on over then to Applied Materials, which reports earnings on Thursday, May 16th. The semiconductor company is expected to see Q1 earnings rise 5% to $2.13 per share, and the street expects revenue to climb 0.5% to $6.71 billion. Here's what we'll be watching with Applied Materials. We'll be looking to see when and if sales growth resumes, and we'll be on the lookout for any comments on the DRAM market. And we'll also keep an eye on any China exposure risk. So Ed, what's the story here with AMAT?
AMAT, a lot of these chip equipment makers have come back. They're cyclical, and so their earnings often don't look that good when the stock rallies. I mean, we usually say, hey, we want those really strong earnings, but with chip and chip gear names maybe in particular, people see that turnaround. You can sort of see it's like, oh, this is coming, and the orders are coming, and so you can see that, and people know that, and so they bid the stock up, even when the fundamentals seem to get worse and worse and worse. So that is going to see, like, are we going to start seeing that growth? Are we going to see sales growth return? I mean, because, okay, we've had this turnaround in the stock. Are we going to see the turnaround in the earnings? This one, it's a huge, it also gives a reading for the rest of the chip sector, because we had some a few weeks ago. This is sort of like a few weeks into it. Are we getting that, getting another gauge for some other names in this space? This one has, as you say, China exposure, has a lot of China exposure. And as there's more restrictions between the U.S. and China, U.S. putting restrictions on some equipment, that's affected Applied Materials. And China could turn around and say, hey, let's stop buying this stuff. They're going to cut it off. So let's shift over to domestic suppliers. So that's a concern. It's been a growth market, obviously, for the chip sector, but that's becoming a headwind for Applied Materials and a lot of other chip plays. Definitely one to watch on the earnings on those kind of turnarounds.
All right, well, let's take a look at the chart then. And as you mentioned, a very nice turnaround here, but as you said, we're still waiting to see that earnings growth really catch up. And this one is basing ahead of that earnings report with a flat base entry of 214.91. So what are your thoughts here, Ed?
Yeah, and you can see that big, ugly downside week. There was a lot of chip stocks that had them, and the market did too, but especially chip names. So this one bounced back above the 50-day line. It has a flat base. It could probably be seen as actionable. I think if you look on a daily chart, you can sort of see some short-term highs. And again, you probably want to wait for earnings unless you're doing an earnings play. But you could see just those short-term highs as sort of almost like a handle in this situation. So that would be a place where you could enter, especially after earnings. But it's not that far away from the buy point. It's not like you'd be extended from the 50-day line if you got up to the traditional buy point. So that's what you're looking for. The RS line is holding at highs. It really hasn't given up much ground after a nice run up. So that's good to see. It's like, okay, it's fine. It's not at highs, but it's taking a break like the stock, but it hasn't really given up a lot of ground. So this one is in good position. One of the things is sort of like picks and shovels, like NVIDIA is sort of like the picks and shovels for all these people trying to do AI stuff. Well, AMAT to a certain extent is picks and shovels to the picks and shovels. So I think, that's another way, whoever wins, as long as somebody is winning out there, Applied Materials has a decent chance of participating in that.
All right. Well, now I know about the picks and shovels to the picks and shovels, Ed. And, we talked about some of the big earnings coming up, but let's take a look at a few other names reporting next week, starting with Shoemaker on Holding, which posts earnings on Tuesday, May 14th. So, what are your thoughts here on this chart, Ed?
Well, it's not looking, it was looking a lot better at the start of the week when it was starting to almost signal like, hey, it's getting almost actionable, but selling off pretty hard. Not sure about the reasons why. This is very volatile, and earnings are really can move around. So this one, and it hasn't had a good track record on earnings in the last few quarters. So I think you'd want this to prove itself for sure, get above at least this week's high, following earnings before getting too excited. You can definitely see the deterioration in that RS line as well.
All right, well, let's take a look at new holdings. The Brazilian banking platform also reports on Tuesday, May 14th. And this one also basing as well in a cup here with a 1238 buy point. And what are your thoughts on this chart, Ed?
Yeah, it's looking pretty nice. There's been some strong growth in this name, a sort of digital banking firm. There's a lot of these Brazilian fintechs that have perked up in the last couple of weeks. I mean, a lot of things have done pretty well. Maybe it forms a handle or something close to that on the cup base, which would be nice, and moves out on earnings. I mean, that would be something that would be ideal. Strong move here. Definitely one that people aren't necessarily paying a ton of attention to, but it's done quite well.
Right. Well, that's why we're here. And that also wraps it up for this edition of Earnings Cheat Sheet. And if you want even more market analysis, be sure to tune into Stock Market Today with Alyssa Quorum. That goes live after the closing bell. And be sure to follow us on X or Twitter at IBD Investors. We'll be posting a curated calendar of all the notable earnings reports on our radar over the weekend to help you prepare. And thanks so much for watching, and we'll see you next week.